Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
My name is Rob Clayton and thank you for joining me. The Australian dollar remains on the back foot after this week's softer than expected GDP figures, which have reinforced concerns about slowing economic momentum. According to the Australian Bureau of Statistics, the ABS, the economy grew by just 0.3% in the fourth quarter of 2025, well below forecasts of 0.5%, while annual growth eased to 1.8% from 2.1%. The weaker growth backdrop has strengthened expectations that the Reserve Bank of Australia could eventually adapt a more accommodative stance. However, Governor Michelle Bullock continues to emphasise a data-dependent approach. Markets now expect the RBA to remain on hold with a June pause, fully priced, and little expectations of a move in August. Attention now turns to Friday's non-farm payrolls report, with forecasts pointing to around 85,000 jobs added, which is down from 115,000 previously, while employment is expected to hold around 4.3%. Looking at the technicals, we've got an ADX that is bearish. We also have a negative RSI and a weak MACD, which therefore still keeps my view on track, that is towards 70, 70, 70, 80, this level where I've outlined here, and reassess just in case we see a bounce from this area back to 72 cents. But overall, the bears are weighing on the market. Turning to the euro, well, the market is still a little bit weaker, and all eyes now look towards this level around 115.65 to 115.0510 and reassess from there. We may get a correction from this area, and if so, could see a bounce back towards 118. The dollar yen, well, we got two hanging men, candlestick formations, which warrants caution, often signalling that the bullish momentum is fading and a reversal may be developing. Safe haven demand and a broad US dollar strengthening continues to support, though traders are growing increasingly wary of a potential Japanese intervention, and if so, could see a pause in this rally from 160 and look back towards the area of 158 and reassess from there. Sterling, well, the market is still a little bit indecisive in terms of with the inverted hammer, and the technical still weak, and therefore could still see a move towards this bottom side of the range around 133.2540 and reassess. Turning to equities, a little bit weaker as we can see inside this channel, but as we get closer towards the support area, seeing somewhere around 4,435, or if it doesn't hold there, little to around 4,380-90 area, then we could see a bounce, but overall still negative, as we can see by these two patterns from the RSI and the MACD. While looking at oil, the market gave back some risk gains after its 3-day rally, but still respectively holding within the range of 90 to 94. Overall, we still could see a bounce back up towards $96 and reassess from there. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.